Okay, there we go. So I wanted to talk about really quick, and I know the market's moving pretty quick here. We're up another 45 basis here, and to me, I noticed a couple things that are going on here. First of all, everything's going up, and sectors are rotating around, so it's been just tremendous. And I'm kind of juggling a long portfolio right now, and I don't have any hedges on right now. And what I'm noticing is two things. First of all, we're really overbought. So, and we're a 79 RSI on the S&P. We've gone up basically in a straight line since the beginning of the year. So what I'm looking at this point is looking to put on a hedge trade. And why do I want to do that? Because once we get into just the end of this week, right? Today's the 9th. We start to get into the earnings, the financial earnings basically on Friday, Thursday, and Friday. That's the 12th, so yeah, that's Friday. We get JP Morgan, Wells Fargo, which it is what it is. The financials have been kind of a non-event the last couple earnings cycles. When I really start to kind of take a look at earnings, it's right around where Netflix reports earnings. So when does Netflix report earnings? That kind of kicks off the FANG stocks, and really we start to get into when we get to days where there's just a ton of companies reporting. So they're not out until the 22nd. So we've got a little bit of time before they report. But next week we'll start to get busy towards the end of next week with earnings. I did just quickly glance at the calendar for earnings, and you can see once we get through the weekend, you can see that Xilinx, Goldman, Alcoa, JB Hunt, just then it starts to really heat up. IBM, you go on and on. There's Netflix. And then after that, then it just continues to get really busy with earnings. So one thing that I've noticed, and why I want to talk about this now, is because we're not there yet. And well, I'm looking at a one-year chart of the S&P. What I think has happened the last couple earnings cycles is we've run up to earnings, run into earnings beautifully, and then we kind of chop around a bit. So just to kind of give you a sense, the last few times, and again, I'll look at the date that Netflix reported earnings, just to kind of give you a sense. So if we go to January 18th, which is right around here, you can see that it's kind of a choppy area for a couple weeks. So if I zoom in, we don't need to be zooming all the way out here. Zoomed out a little bit too far. But yeah, right into January 18th, it's kind of a choppy area. And then we did take another leg higher in the S&P. If we look at the next earnings cycle for it, which is April 17th, which is right into here. Again, we did have a leg up here, but a little bit of chop for a couple weeks. I think it gets even more pronounced once we get into July 17th, which is where Netflix reported earnings, which is right here. Look over it over the next month and kind of a choppy area. And then finally, October is the last time that they reported 10/16. So it's not completely flat, going through this review, but the overall market, I don't think, just really gaps up and goes higher. So what I would be looking to do, my thought is that it might be a choppy area just for a couple weeks. So the other thing is we're really running hot right now. So I think it's a great time, being that the S&P has gone up in a straight line since the beginning of the year, which has been awesome. I don't want to say anything negative about that because, again, I'm juggling and managing a long portfolio with no hedge on. So this, I think, is a good time to put on a hedge. Not to say that we're going to have a major correction. I just think it's right now with the RSI running at 79 that it's a good place to do that. So what I'm looking at is kind of going around earnings season. If you want to, so you can basically select whatever you want to. I decided to go out a little bit further. I usually like to go out a couple weeks when I sell call spreads. I think the right trade for me is to sell call spreads. I'm not necessarily thinking that we're going to correct other than chop. I think more I'm looking to put on a trade in case we get chop. So what I'm looking at is the February 2nd, just a $5 wide call spread. I don't want to lose a lot of money if we continue to move up. I just want to have something that will give me a little bit of protection. And I think going to the 2780, which is about a little bit over a percent out, 2780, 2785 call spread. You could put this on. So again, I am going out of the money. I'm not going right into the money. So I'm giving myself plenty of bumper room because again, this is a couple weeks out. So what I'm looking for is to capitalize on this hedge trade in case we do pause, get a little bit of chop, or even move down. And I think after the run that we've had, to me, that makes sense. So you could put this trade on. You could sell the 2780 February 2nd calls. And you could buy the 2785. So this is a bear call spread, but it's way out of the money. And you could put this on for about $1.70 right now. So again, $5 wide call spread. And I'm selling that to collect $1.70. If we start to come in, I usually don't hold these spreads out to expiration. If we do get a pullback and I get, let's say 60 or 70%, then I look to take the trade off. Because as we know, this is a very strong market. So if the market comes in, this will realize value, but I don't want to hold it to expiration. We don't want to hold it to expiration because the market could obviously come back. If that happens, if we do get 1 or 2 days of a pullback. All right, so that's my trade. Again, just looking ahead a little bit. I know right now the market is wonderful. Things are going up. A lot of us are making money, but I want to look out to what we've got on the horizon and structure a trade in case we do get a choppy market in the next couple of weeks during earnings season. Thanks for watching the video and enjoy the rest of your day.